morning. It's Mary Ellen McGonagle, and you're watching the MEM Edge show. This is the show where we put you in front of where the action is in the broader markets. And I hope everyone had a nice long weekend. We are jumping into earnings season this week with over 500 companies due to report. So let's go ahead and get started outside of that and review what we are going to be covering today. As usual, we're going to take a look at where the current markets are. Are we in still a healthy uptrend? Make sure you have the backdrop of a healthy market behind you before you put any of your money to work for you. And then also, we're going to take a look at stocks that have gapped up in price. We've seen quite a bit of that. And as we go into earnings season, there's an anticipation that you will continue to see these gaps up, depending, of course, on the earnings reports and their results. So we'll take a look at historical precedent and how you can handle these gaps up that we are seeing in stocks. Also, relevant stocks that are due to report earnings this week. We're going to be covering some of those better known names, larger cap stocks that are due to report, with an eye toward potentially being news driven as far as impacting other areas of the market. And then we are going to take a look at reviewing oversold healthcare stocks and how you can potentially play a turnaround. Are we there yet? We'll take a look at some of these stocks that have gotten hit really quite hard over the last 2 months. And then capitalizing on strength in the Chinese markets. China came out last week. They announced their Q1 GDP numbers, and they were quite surprisingly ahead of estimates. So we're seeing a bit of strength in Chinese stocks. We'll take a look at some of the ADRs that are quite attractive given that strength. So let's go ahead and get started and take a look. Actually, the first area that I do want to go ahead and show you is we'll take a look at the S&P 500. This is a daily price chart. And as usual, each bar here is representing 1 day of price activity. And this is taking us into today's action. What I've done here is overlaid some simple moving averages. These can be really quite powerful as far as signaling to you, is the market continuing in an uptrend? Are we seeing support being broken? So this green line is your 10-day simple moving average. Quite simply, this line represents an average of the last 10 days of the close. So we can see this. Currently, the S&P 500 is finding support at this upward trending 10-day simple moving average. So that's quite constructive. We also have the red line 50-day simple moving average, as well as the 200-day. This is your blue line. We want to keep an eye out in the event the indexes do break this 10-day support. Your next area of potential support is going to be the 50-day simple moving average. So this would take us back to this period last fall, of course, but for now we are currently in a confirmed uptrend. Up here I have what's called the RSI. That's a relative strength indicator, momentum indicator. We want this indicator to be above this 50 or net neutral, also ideally trending upwards. So we can see that the RSI is in fact healthy. We're well above that net neutral 50. And down below, we have what's called a MACD. And I actually like to use stochastics when I'm looking at these broader market indices. So over here, I'm going to show you quite quickly how you can modify some of these overlays. So I'm putting the what are called full stochastics below the price chart. And this is another momentum indicator. We also want to pay attention to the slope of the stochastics and then where they are relative to this net neutral 50. Once the stochastics get up here above 80, which is where they are now, it's indicating that the broader markets, you can use these, of course, for individual stocks, they're in what's called an overbought position. And certainly it can remain in overbought for quite some time. I'm taking you back to the beginning of this year. We did see the stochastics up here, but also touching upon that 80 and being able to bounce. Now, of course, we had more in the way of pullbacks here in the beginning of March. and the end of March as well. And taking a look at the stochastics positioning during that time, we can see that it broke below that 80. And then periodically it did get below that 50. But currently the stochastics are in positive territory with an eye, because it is overbought, for a potential bit of a pullback. But overall, we can see that the S&P 500 index is very much in a healthy uptrend. So let's go ahead and drill down a bit further and take a look at some of the sub-industry groupings within the broader markets. So as many of you know, the markets are broken down into various sectors, and then we also have other broader market indices that we can take a look at. So this is called the Candle Glance View. It's accessible from page 1 of StockCharts.com. And from here, what you can do is populate this view with up to 12 different can be ticker symbols. Today, I do have a lot of these sector charts up here. XLK is technology. XLC is your communication services. And then from here, what we can do is go ahead and add an indicator. I have what's called the RSI, Relative Strength Indicator. I want to see where the strength is among these various sectors in the broader market indices. Then you can sort it by descending. And what that is going to do is present us with a view so that we're looking at strength up here on the upper left side to weakness. So taking a look from this view, we can see that surprisingly consumer staple stocks are up here in the forefront. And I will tell you, a lot of my work, I'm reviewing charts on a very, very regular basis. I want to see what's behind these different moves, where the strength is. So within the staples sector, we're seeing a lot in the way of turnaround. I know today Kimberly-Clark came out with earnings that were surprised to the upside. A lot of these companies are doing cost cutting, they are presenting and providing new products, and they're really switching things around. So while staples can oftentimes be viewed as a defensive industry grouping because a lot of the stocks do provide yields, there's also a movement within staples that is very much growth driven. You're seeing, again, a lot of broadening out of products, cost cutting, and so forth, that is bringing these stocks to the forefront. If we have time, we'll go ahead and drill down and take a look at some of the names within. But then secondly, here we have technology, and the technology is certainly leading the broader markets. This is an index that continues to hit new highs, a lot of sub-strength within the technology sector, a lot of innovation occurring among stocks there. And then communication services, XLC, and this is going to be all about Facebook and Netflix, as well as some of the other communications types, internet related stocks. Consumer discretionary is also a leading group. It's pulling back a bit today. But let's go ahead down to this weaker area. We talked about healthcare. Take a look. This is a sector that has been getting pummeled here of late. Has everything to do with potential political headwinds in DC. We'll review that further as we get into taking a look at some of these beaten down stocks. We can see we're seeing a little bit of a bounce today, and we'll go ahead and reveal how you can uncover where that strength is today and potentially, again, capitalize on some of these stocks that may have gotten beaten down without any sound reasoning as it relates to policy shifts. And so that is a view of, again, strength to weakness. Another area of weakness here among the broader market indices is the Russell 2000 index. This is comprised of small cap stocks, and we can see that as opposed to the strength up here on the upper left side, the Russell 2000 is lagging, and it is down again today. So this is not something that we want to see. Ideally, over time, we do want small cap stocks to pick up the pace. Generally, they can be, as far as groups, they can lead the markets. And again, ideally, we do want to see a bit more strength here in the small cap stocks. So let's go ahead and get started with some of the areas that we are going to be reviewing. I talked to you about the concept of stocks gapping up. So let's take a look at some really headliner names that have gapped up here recently. Last week, we did see a very big upward move. This is a semiconductor stock. It's Qualcomm. QCOM is the ticker symbol. And for those of you not familiar, they do provide semiconductor chips primarily to iPhones. So what we are seeing here, take a look. This stock actually overall last week was up almost 40%. And so what we can see is all of it in this case was not earnings related. This was primarily on news. The company had been in a fallout with Apple. They were headed for court, but they were able to settle their differences outside of the courts. So that was huge news for Qualcomm. And then also on the heels of that, Qualcomm, and it was a patent dispute that they had with Apple. In addition to putting the dispute aside, they also rekindled their relationship with Apple. So they are now, for the next 6 years, going to be providing the semiconductor chips for the Apple iPhones. Huge, huge positive news. And then lastly, news came out that the chips that they will be providing are 5G related. Intel was a competitor. Intel dropped out. So lots and lots of good news for Qualcomm. So a lot of individuals would think if the stock has this huge gap up, it was up 40%, that the move is over. But take a look. We can see that it is up another almost 2% today. So two key areas that you will want to pay attention to here. One is take a look at the volume on these gaps up. And so 2 days of good news, we can see that the volume was really exponential. This is telling you two things. One is that institutions want in, and for these institutions to accumulate a position, it will take time. It's not a one and done. This will occur over time. So this type of big volume is telling you that the stock has more upside potential. It also could very well be short covering. There was not an anticipation that that agreement with Apple would take place. So you have short covering that's also pushing it higher, but more importantly is paying attention to these key volume metrics as a boost to the concept that the stock could very well continue higher. One other area, in fact, let's go ahead. I talked about looking at example stocks as far as keying in on characteristics among other stocks that have gapped up. Let's take a look at a big winner from last quarter earnings, XLNX. If I can get my ticker symbols correct. And we're going to take a look at Xilinx. And what I'm going to be pointing out to you here is the fact that the stock did, in fact, have a gap up here. This was all about earnings. And we can see, take a look. I talked to you about that volume. We're looking at a daily price chart of Xilinx. They came in with exceptional numbers. And this is another stock, incidentally, that is in the semiconductor space. They are a leader as far as providing programmable semiconductor chips, big in the 5G space, still in a confirmed uptrend as an aside. But what we want to look at here is this gap up here. This was earnings related, and the stock continued to have this upward move subsequently. So very, very similar to Qualcomm. And oftentimes what you will see subsequent to these gaps up is a continuation, again, as institutions continue to accumulate the stock, but oftentimes then it will have a period of consolidation. And this happens again and again, where the stock essentially drifts back. But in essence, what is occurring is during this period of this gap up, the stock gets extended. And by that, I mean, take a look at the difference as far as the price relative to this 10-day simple moving average. It can be as simple as eyeballing it. But during this period, the stock did get very extended above that 10-day simple moving average. And what you are looking for is a potential pullback. And during this period, the stock did get about 10% above this 10-day simple moving average. So again, oftentimes it will drift back. This pullback to the 10-day simple moving average, provided if analysts are still raising estimates, if we have a bull market, if semiconductor stocks are still in an uptrend, this pullback can be a very ideal opportunity to get into the stock if you had missed it into this gap up. And we can see that this uptrend still carries on. Let's take a look at another Q1 earnings gap up winner. This is also 5G related. It is Arista Networks, ANET. And we can see here, this is that gap up that I talked about. This is all about earnings. Take a look at this volume bar here. And we can see that the stock, in this case, during its pullback period, it did pull back beyond that 10-day simple moving average, but that has everything to do with the broader markets. When we were looking at the S&P 500, you may have noticed that we had that pullback here in this March period. So, but it is continuing on as far as with that uptrend. So going back to Qualcomm, I'm going to show you another view that can help you if you are interested in taking part in or as far as this what appears to be a continuation of last week's gap up. And what we're looking at here is what's called an intraday chart. This is a 1-hour chart. And here we are. This is last week's action. And what I wanted to show you here is the very same metrics that you're looking at for a daily chart, weekly as well, are going to be relevant on your intraday chart. So each bar here is 1 hour of price activity. Your moving averages are going to shift, however. I have a 5 and a 13, so that's a 5-hour and a 13-hour. And we want to pay attention to this stock's price relative to these simple moving average, as long as the price is finding support above the simple moving average, you're in good standing. Your RSI also above 50. Now this greened in area above 70 is indicating that the stock is overbought, but it can remain in overbought for some time, but it is with an eye toward an eventual pullback. So of course we can go back to other prior periods when stocks are overbought. This is an indication that the stock could be pulling back as the RSI trends downward. Certainly as it breaks below that net neutral 50, that would be a negative. And down here we have what's called a MACD. We do today appear to have that black line crossing down through the red, which is can be a negative signal, but we're still well above that net neutral 0. So that's another view that can really help you with these gap up stocks. Let's take a look at another stock that gapped up. Going to take us to a daily view first. So here we are. And we're looking at last week. Last week, Disney came out with very good news, and the company announced that they will be releasing their streaming video streaming similar to Netflix. It's not going to be released until next fall, but analysts are super, super excited about it. It's very aggressively priced, their streaming videos, and we can see this big gap up here on the news. Again, take a look, huge volume, the stock continuing to now consolidate following this big gap up. We can see a bit of a back and fill action here. The stock on the daily is a bit oversold. We can see by that green line, but there's a lot more good news ahead for Disney. They have a lot of blockbuster movies, in fact, 4 that are due out throughout year end: Star Wars, Toy Story 4, and so forth. But all of this has analysts really salivating. They're continuing to raise estimates. But again, we can see this consolidation period that has been occurring certainly over the last 5 days, all with an eye toward this 10-day simple moving average eventually catching up to it. This is normally what we do see upon a gap up. We can also go ahead back and take a look at this intraday view. And certainly today, the broader markets are a little bit flat, but the RSI is trending a bit toward that net neutral 50. So if it were to break below that, let's go ahead and take a look at this MACD, because we did get an earlier black line through the red last week, and it is trending toward this net neutral 0, but it does appear at this juncture to be more in a stagnant sideways type of a period. But this intraday chart can be really quite helpful as far as helping you time your potential entry into the stock. And let's go back here and take a look at what you would want to key in on should we see a further pullback in Disney. and using historical precedent is really super helpful. I'm taking you back to this end of March period when the RSI did in fact deteriorate to a point that it got below this net neutral 50. As it turns around, you can see the RSI trending upward. You want that to be in line with the stock's price breaking back above these simple moving averages. We can see we had an earlier positive MACD black line up through the red. Putting all of this together would have gotten you into this significant uptrend that really never looked back. So that would be precedent as far as, again, if we get some sort of significant pullback and you're looking to re-enter a given stock. So let's go ahead. I talked about some significant stocks that are due to be reporting earnings. And in fact, there are a number of names, but we, again, are going to key in on those stocks that are bigger, better known, because these are going to be potential game changers, as you will, if you will, as far as impacting the broader markets. So the first name we're going to look at here is Amazon. They are due to report on Thursday. And let's take a look because the stock is currently very much in an uptrend. This is that 10-day simple moving average that I talked about. We can see the MACD is up here in positive territory above this net neutral 0, and your RSI is trending upward. So Amazon, again, they are due to report later this week. And of course, this stock is a very big heavyweight among consumer discretionary stocks. It is the largest among consumer discretionary stocks. And we can go ahead back and take a look because the company reported their prior Q1 earnings, Q4 earnings were reported right here at the end of January. This gap up here was the release of their earnings. Unfortunately, they gave back any potential uptrend from that particular gap up there, and the stock really languished. We're certainly in a very different period here, and there is anticipation that holiday sales came in strong. What's going to be really critical here after the company reports on Thursday is whether or not the stock is what's called price for perfection, where analysts have been revising estimates upward. The stock continues to get bid up. And is the good news built into this stock? And this is where it gets a bit tricky as far as trading into earnings, because there is always that that possibility that you get a move similar to this period where it gapped up big volume and then gave it all back the next day. So of course, this is going to be a very closely watched earnings release. Here is another consumer related stock that is also going to appear to have much of any good news already built into it. This is CMG. We're looking at Chipotle. I'm going to go ahead and pull up a weekly chart here to give you a little bit of a different view, just to really key you in on how significant of an advance. This is one of the big year-to-date winners is Chipotle. Now, more recently, over the last 4 weeks, it has been marking time. So that is certainly constructive as we go into earnings. We can see that during this prior period, the stock really got overbought up here above the 70, the RSI. So this is another one that is going to, of course, be and is widely anticipated to come in. Analysts are anticipating 41% year-over-year earnings growth this year, continuing to revise their estimates higher. They're doing a lot in the way of digital sales where individuals pre-order Chipotle. And then let's take a look, because here's another one that is in this same industry group. It's Starbucks, another big year-to-date winner. SBUX is the ticker symbol. We're looking at a daily price chart. I'm going to quickly pull up a weekly, again, to really just tune you into how significant of an increase this stock has had. So another could be price for perfection, if you will. But these guys are due to report on Thursday as well. And we can take a look at one other stock, because I have a couple of other areas that I want to get into. I can mention that Microsoft is due to report, of course, heavyweight as far as computer software stocks. This has been another big winner. Software stocks have been year to date very big as far as their moves topping 20% or more. Microsoft certainly at the head of that pack, if you will. So they're due to report on Wednesday, and they have a lot in their backdrop in addition to software. Of course, they own LinkedIn. There's going to be investors are going to be paying attention to subscribership numbers there, but the stock for the most part is very much in an uptrend, and we can see that it is continuing to outpace the broader markets. This is a company, another one that reported at the end of January, so we can see this gap up here on their earnings release. They did come in 15% ahead of estimates back in here, and then the stock really never looked back since then. So it's going to be quite interesting to see how these guys come in on Wednesday. And we can now move on because I do want to take a look at some of these healthcare stocks. They really have been beaten down. Let's take a look at one of the real bellwether names currently that's being talked up quite a bit because they did come out with earnings. United Healthcare, UNH, really just getting clobbered in here. This is a primary major healthcare provider. These healthcare providers, Cigna, Anthem Blue Cross, these are the guys that are really getting hammered the hardest because they are going to be the most impacted if we do get potential policy shifts as it relates to potential what's called Medicare for all, where private insurance no longer has a platform. UNH CEO came out and talked about just how disruptive that would be. So the stock really is not bouncing much today. It's up not even 0.25%. But this is another area where I was going to review with you how you can potentially use these intraday charts to guide you. But really, we can see we're not quite ready for prime time just yet. RSI, this again is a 1 hour. Each bar is 1 hour price activity in an intraday chart. So we can see the RSI is poised to trend above this net neutral. And then also the MACD did have this positive black line up through the red, but we're still below this zero line. Good news, the price is above these simple moving averages, but you get a sense that there are still headwinds. We are close on the intraday to potentially reversing. The other area that I did want to go ahead and draw your attention to is within StockCharts.com. If you go to this initial page, let's go down to what's called the sector summary. And what we can do is see, this is today in the broader markets. It's sorted by percent change performance. And take a look at healthcare. Now, it is definitely fading. It was up about 0.5 point earlier today. And I am going to have to leave it soon, but you do want to pay attention to where there is strength. And then from there, go ahead and take a look because some of these are going to be potentially turning around. You can hover over and see which of these beaten down healthcare stocks potentially could be turning. And I am going to go ahead and leave it at that. For those of you in the markets, happy trading.